Hi guys, and welcome to another Vantage FX end of day technical analysis video. And the theme for this week is trading in quiet markets, trading with low volatility, trading with high volatility, low liquidity, and so on, and sort of not normal market circumstances basically. So throughout the week we've had a look at trading the price action for cable over the Christmas period and how it reverts back to the spiky prices that occurred throughout thin markets. We've also had a look at euro dollar and how volume picks up in certain points of technical interest. Today we're going to have a look at the very, very tight ranges that you do actually get in a holiday market. And today is Thanksgiving, so happy Thanksgiving to all of you. And I'm going to take a dollar yen chart for you here and just have a look at the price action over the course of the last sort of let's look at the course of the last 12 hours. Now, this is a 30-minute chart that I've got here for you. I'm not going to look at anything bigger because sometimes you get big price fluctuations in thin markets in holiday periods, and other times it's exactly the opposite and you get very, very, very little. And as you can see here, dollar yen has had a 30 pip range. So I have chosen this 30-minute chart, and you can see I've plotted some Bollinger Bands on there with a 20-period moving average in the middle, as you can see. And if you note, whilst we had a bit of a couple of spikes and a couple of tests to the downside, that was early morning in the Asia session, we have come back up. So let me just zoom out and show you we've had a push to the upside over the course of yesterday, up above 102, the figure. And zooming back in, having a look at the price action, you can see that we've had a 30 pip range. So let's incorporate the volume now into this. So you see down here, volume picks up a little bit and then comes back up. That means there was no interest to take it further. Had another little test to the downside, volume there, similar amounts, slightly lower the previous candle, and push to the upside again, reverting back to the mean. When your Bollinger Bands are flat, it means you're range trading. When your Bollinger Bands fan out, it means you're trending. And as you can see here, we were trending throughout the course of yesterday. So going back into these charts, having a look at here, you can see that if you are looking for very short-term scalping opportunities, you could have pretty much bought it at the obviously the market wasn't as thin there as it is now because the Asian session have gone home. Europe is going to be squaring up in an hour or two, and then potentially for the rest of the day while the US is off. Obviously not everybody is off. There are people that need to man desks and people who are always do have interest in markets, especially if they're trying to move a market in thin conditions, but that's not always likely. But anyway, you can see very, very simply we've had a very quiet day throughout the European session as well. So we came from the bottom band, reverted to the mean all the time, and there is about a 10-15 pip range there, and there's about a 10-15 pip range here. So buying it at the low, reverting to the mean, selling it, buying it again, reverting to the mean, pushing again to the mean, pushing above, getting to the top band, coming back to the mean, back to the mean. Here we had a little bit of a test to the upside, but look at the volume, little follow through, little conviction, little want to really push it away. This was the high for today. We're coming in about 102.37 and only 10 pips above where we're trading at the moment. And we've just sort of reverted back to the mean. In the previous Audi candle, your low was 102.20. So you can look at the Bollinger Bands and you think, okay, until we break out of this titchy little range, I'm going to buy it at 102.10, 102.10. And sell it towards the top of the range at 102.30 until the bands start fanning out. They are ever so slightly meandering to the upside, but they are not trending in any particular direction. So your support, first support 102.20, so 5 pips below. So if you'd sold it up here, put probably a stop the height of the moving average to the top Bollinger Band, so you know your 15-point stop, and then look for a potential reversal down to here. Likewise, should we come down to 102, you'd probably expect a couple of short-term buyers to be coming in and turn it around. And that is the thin market and quiet, should I say, market. However, as I said, caution is always warranted because you can certainly have price spikes and watch for volume, watch for interest, watch for Bollinger Bands, watch for the moving averages if they're trending or not. And obviously you have to look at a very short-term time frame here because the longer-term time frames are irrelevant in a tiny range. So that's why I've drilled down and shown you the 30-minute chart. So tomorrow we'll come back and we'll have a look at whether this trend actually continued or whether somebody decided to push it a little bit further and out of the range. Thanks for watching.